What is a credit union service organization, CUSO? Have you ever wondered how credit unions can offer such a wide variety of services? One key player in this is the Credit Union Service Organization, often referred to as CUSO. So, what exactly is a CUSO? A credit union service organization is a business entity that is either fully or partially owned by one or more credit unions. These organizations are set up to provide specialized financial or operational services primarily to credit unions and their members. Unlike credit unions, which operate as member-owned, not-for-profit financial cooperatives, a CUSO usually functions as a for-profit entity. It can be organized as a corporation, limited liability company, or limited partnership, depending on federal or state laws. This structure allows CUSOs to offer a broader range of services than individual credit unions might be able to provide on their own. By pooling resources and expertise, credit unions can access specialized services through a CUSO. These services can include commercial lending, information technology solutions, compliance support, investment advisory, insurance, and various other financial services. This collaboration helps credit unions stay competitive in a complex financial environment. From a regulatory perspective, federally insured credit unions can invest in or extend loans to CUSO. However, it is important to note that the CUSO remains a legally separate entity. The National Credit Union Administration defines a CUSO as an organization in which a federally insured credit union has an ownership interest or has extended a loan. The primary focus of a CUSO is to provide products or services to credit unions or their members. Ownership of a CUSO can vary. It may be wholly owned by a single credit union, jointly owned by multiple credit unions, or partially owned by credit unions along with other non-credit union partners. This flexibility allows for partnerships that can introduce innovation and additional expertise to benefit credit union members. CUSOs offer several practical advantages for credit unions. They expand service capabilities, allowing credit unions to provide services beyond their individual capacity. This improves the offerings available to members. Cost efficiency is another benefit, as sharing resources through a CUSO can reduce operational expenses. This enables credit unions to reinvest savings into member services. Additionally, CUSOs attract professionals with specialized skills, which enhances service quality and innovation. They also create additional revenue opportunities, allowing credit unions to diversify income sources. This supports financial stability and growth. In the context of both banks and credit unions, CUSOs serve as a strategic tool. They strengthen credit unions' ability to serve their members effectively while ensuring compliance with the Federal Credit Union Act and related regulations. However, as separate for-profit entities, CUSOs may have incentives that do not always align with those of the credit unions they serve. This requires careful governance and oversight to ensure that the interests of credit union members remains a top priority.